Hey, what's good, everybody? I'm going to be creating a video for beginning traders that are just now beginning and they want to become better at market structure. They want to really get in tune with their market structure and understanding how the market does move, what to expect from the market. And they're just looking to, sharpen up their skills just a bit. I'm just going to be going over the basic support, resistances, lower highs, higher lows, all that good stuff, right? So I'm on TradingView, but I'm just gonna be using this line over here to just, make things a little bit simple for you guys. So if you guys should just follow me. Obviously the market moves in three ways, right? It moves up, right? It moves up, it moves down, and it also moves. Let me make this a little bit. Let's organize this just a bit. It moves up, down, and it also moves sideways, right? Those are the three ways that the market moves sideways, right? So with that being said, what are you looking for, or what are some things that you could be looking for when you are in these market conditions, right? So obviously we have a what uptrend here, uptrend. Let's make this a bit bigger and let's make it blue. And over here, we have a downtrend. Let's make this one red. And then here we have consolidation. Consolidation, right? So these are our three different market conditions, right? Let's highlight them just so we know where we are, right? Now, what's happening in an uptrend? We have a low point here. Let's go with orange, my favorite color with this. We're gonna go low. Then we have a high point. Then we have a higher low point, higher high, higher low, higher high, higher low, higher high, right? So that's what you're looking at when you are in an uptrend, right? Basically, the most important thing of an uptrend is that you're making higher lows and higher highs, right? As long as you're making these, you're flowing properly in the uptrend, right? So when you're in the uptrend, you really wanna, let's not even talk about entries. Let's just focus on the market structure, right? So this is the higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? That's an uptrend, right? And the higher lows and higher highs are what's really important that to know that you're in an uptrend, right? So for a downtrend, you have a high, then you have a low, then you have a lower high, you have a lower low, another lower high, and high. Then we have our final lower low point, right? Now, In downtrends, obviously the lower highs and lower lows are important, right? Lower highs, lower lows, lower highs, lower lows, right? Those are what's important when you're looking at a downtrend. Now for consolidation, you have a market that is moving sideways. So you really have, let's call this a low point. Well, it is a low point. This is going to be a high point. And price is respecting these two zones, right? It's not making a, doesn't make it. Price is respecting these points here, right? So when price is respecting these two areas, the high point and the low point, you know that you're in a consolidation. This is when lots of traders do lose money. Some traders, not lots, like lose a lot of money only because like they're expecting the breakout from the pair, but it never really breaks out. It comes and they like it comes all the way back down and they close out because they think they're wrong or it hits their stop loss. And it comes right back up, then it just starts moving sideways. So you start overthinking and then you do something you're not supposed to do, and you end up trading in between these areas here, and then you end up just like your bias is not is not in a you think your bias isn't right only because it's moving sideways and it's not ready yet. So you want to try to avoid consolidating markets at all cost. But just in my opinion, some people like trading consolidations. I don't. I tend to lose lots of money whenever I do trade consolidations until I realize, oh, I zoom out and I see where it's consolidating. So that's a story for another time. But let's change up the let's talk about our uptrend here. So for an uptrend, obviously we're making highs and we're making higher lows and higher highs, right? So as long as this, let's talk about like what's in a higher low, right? Obviously, this is a low point here, right? If we make some type of support here that's higher than this previous low, is just considered a higher low. It's still a low, but it's higher than the previous low. Same thing for the higher high. It's still a high point, but it's higher than the previous high, so it's a higher high, right? So we have a higher high, then we have another higher low that's higher than this low, but it's still the lowest point. Sorry, it's not the lowest point, but it's still lower than this point up here. So it's like a higher low. Then you have a higher high that's higher than this previous high. It's higher low, higher high, and then so on. For a downtrend, you have a high, then you have a low point, right? And then you have another high point, but it's lower than this high, so it's a lower high, right? And then you have a lower low because the lower low is lower than this low, but it's still a low point, right? And then you have a lower high. You have a lower low, another lower high, and you have another lower low. Now for the consolidation, as I explained, you have a low point, high point, and they're both being respected, right? It's moving sideways. This is consolidating market, right? It's moving sideways, not really doing much, right? So now that you understand the structure points of the market, right? Where do you come into play? Like where do you like want to enter a trade and take it to the next level, right? So basically, I'm gonna mark. I'm gonna use a green highlighter for my wanted for my expected. Let's see. Let's see if I can get this to be a little darker. All right, perfect. So where do traders come in play, right? What do you do when you're in a market like an uptrend? Where do you want to enter, right? So basically, when you want to take advantage of uptrend, you want to buy, right? You want to buy into that market because you're expecting the price to go higher, right? So you're in an uptrend, so you want to buy, right? So once you buy here at a higher low point, is where you want to buy because you're expecting price to move up higher to the next higher high. And then you want to close your order here because the price is much higher than it was here, right? So is where you want to execute your trades when you're in the buy. You want to buy at higher low points, right? Higher lows is where you want to buy, right? So now that you know that higher lows are where you want to buy, let's do a little thing where we could go as and explained that higher lows equals buy. Let's see. Right? You want to buy at higher low points, right? And then you want to close your orders at your higher highs. So I'm going to make a dot here, and then we're going to make this one close. It's going to be, I'll make it, I'll make it blue, right? We want to close our orders at the blues, right? So boom, close it at the at the new higher high points, right? That's where you want to close your orders, right? At the blues. Let's go. Equal close order. So you want to buy at higher lows, close at higher highs. Buy at higher lows, close at higher highs. Buy at higher lows, close at higher highs, right? And you're basically just taking advantage of the market pushing upwards, right? We don't want to stay in there for too long. You just want to take care of it. Boom, buy, close. Buy, new higher high, close. Buy, new higher high, close, right? Now, when you're in a downtrend, it's the complete opposite. Let's see, let's make this. Let's make this right here. We're gonna make this red. You wanna sell at these points. Boom, sell, sell at lower highs, take it to the lower low, sell at lower high, take it to the lower low, and you sell at lower high and take it to the lower low, right? And it's gonna be the same color to close that. So hold on. Blue. You're gonna wanna close your order here, close your order here, close your order here. Okay. Equals sell. The red dots are where you want to sell. The blue dots are the same. You want to close orders, close your order. And when you're in this market condition here, like you really don't want to buy or sell, you just want to wait it out until you get some type of breakout. Now, what tends to happen um, when you are in a consolidating market, which I really don't want to go over right now, only because like you're in a beginner's, mind state. I'm in a beginner's mind state. I don't want to confuse you too much for consolidating markets. Just try to avoid them at all costs, only because they're very confusing and you can lose your money. So now this is just the basic market structure, right? In the next video, I'm gonna go and show you guys how to measure out those higher low points and higher highs and how you see them in the real market time, right? So this is just the basic market structure video. And I'm going to show you like using our Fibonacci, right? I'm going to tell you guys what a Fibonacci is, what it's meant to be used for, and how you use it, right? Based on these structures. Now, I want you guys to go and basically find these market points and use this tool over here. It's called the path, right? Use this to mark off structure in real time, right? So I'm gonna go right back up to here, and I'm gonna go on the 4 hour time frame, or I'm gonna go on daily time frame, so you guys could see what I mean by mark off your structure points, right? And for instance, I'm gonna show you the three examples of the different types of market conditions that I was just speaking about, right? I'll actually go to H4 for this. So Let's see, right here. We have this point here. We have our low point here, higher high, higher than this previous high, higher low, higher high, higher low. Then we have a higher high. Then we have a retracement to a higher low. Then we have a higher low, higher high. And then price starts to do what? Starts to move sideways and it starts to consolidate a bit. And then we have a breakout. Then we have a higher low, higher low, higher high, right? And then price goes over here and then starts to do what? Move and make its lower lows and lower highs, right? Once price starts to do that, we start to see price do what again? Start consolidating, and then it breaks out for a lower high. Sorry, for a lower low, and then it makes a lower high. Then we're gonna have a lower low that comes and sets over here, right? So let me do this so you guys can see. I should have, but let me mark it off in like real time. Let me mark it off for you guys so it's a bit clearer. If I go to the daily time frame, it'll be clear for you guys. We had our low point here, low point here. We had a high, really a high. Then we have our higher low. Then we have a higher high. Then we have a higher low. Then we have a higher high. Higher low point, this is a 23.6 retracement, which is not really considered a higher low, but we'll get into that once we get into the next video. And then this is when I was talking about like the consolidating range right here. It was really consolidating for a little bit. It wasn't consolidating too much, but it was consolidating. It was respecting these areas here, right? So let's use our highlighter. Where the hell was the highlighter? It's a bit lighter. These zones are being respected throughout this entire zone here, right? See this area is being respected. Boom, then we finally get a breakout. Then we have a higher high point here. And this is another 23.6, but you can still consider it to be a higher low in some cases. But we'll get into that later on in the course. This is just your basic market structure. Let's go over the lower highs, right? We have a high point here. We have a low. And we even have a lower high. Then we have a nice lower low. This is what? A lower high. Then we get back into that nasty consolidating range thing again. But we do have another lower low point here before it does make that, before it does begin consolidating, right? So once you Once you finish that up, you can just like highlight these areas, right? And sorry, let's not even worry about that. But let's go back over here on where I started to go over these things here. Yeah, so I want you guys to go find probably, I'd say five or find an entire push of an uptrend, right? Mark it off, and then find an entire push of a downtrend, and then find yourself a consolidating range, right? So if you could just do at least do this on probably two or three different charts, and go into the next part of the course, and then I'll go over the Fibonacci retracement and how you gauge your take profits and your retracements and all that good stuff. Cool. Thanks for tuning in.